please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The stock of the moment is United Spirits. Just pull out the intraday chart of that stock. Consumption really has been a strong point for last many days now, and that's the one which is now surging. 34.63 is what we have on United Spirits. 34.67 in fact as we speak. The market also quite okay from the low point. There's been quite a bit of recovery, though at higher point every time the market is attempting recovery, that is getting sold into. On the Nifty now, yesterday's high and today's high are same at around 10,425 thereabout. Ashwani and Mitesh with us for BTST calls. Ashwani, your thoughts first on the index. Is there a trade here to carry forward, and what about the BTST calls?
See, what today has proven is that the downside is limited, and at best this could be a ranging move. So we are carrying our long positions on the bank Nifty for next 25 minutes as well as into tomorrow, because today was a day when the banks could have really taken it on the chin and they didn't. So that is a big positive. So today's day in fact gives you a message for the days to come. As far as individual stocks are concerned, United Spirits is a buy with a stop of 3,400, target of 3,550. Kotak Mahindra Bank is a buy with a stop of 1,100, target of 1,165. And Titan is a buy with a stop of 970, target of 1,010.
Okay, so still going with plenty of buy calls. Titan having its dream run continue today. Mitesh, what's on your list? Mitesh?
Yeah, I have a BTST on Excite, but I think that's kind of, moved up slightly. So around 240, 239.5 if you get it, take it as a BTST call, keep the stop at 237, look for 245, 246 for tomorrow. And TCS amongst the software pack does look like starting a fresh up move. So I would be a buyer here as well. Again, this is a stock which has moved up in the last few minutes, but around 29.90, 29.95. Buy with a stop at 29.74 and look for 30.40 as your target.
Okay, 30.40 as a target on TCS. Amrish, your thoughts on Excite? We've had a sharp move. How would you approach that stock?
Generally, whenever you have these sharp moves in Excite, one can safely, assume that it is because of the insurance arm which they have. Because whenever there's a talk of insurance deal, we have seen that for IDBI Federal, there's talk of Apollo Munich. So from that point of view, people may imagine that Excite also would be there in the market, and because of which the stock moves up. Because if you look at the core business, I don't see any reason as to why it should move up because of the core business. Being a leader, it has been losing out to Amaraja. So I don't think that could be the reason. It's mainly, I think, about insurance, and I think this move can possibly last for 2 to 3 days.
By the way, just wanted to point out, United Spirits is the one stock that Anuj was talking about. Look at Radico Khaitan, even that has spiked and spiked so sharply. It's now bouncing into positive territory. So that's USL obviously. Then it's smaller. Look at the spike on Radico Khaitan. We're just having this conversation on sin stocks with Ravi, and it seems that the market clearly is giving these the thumbs up. Well, on that note, let's get some more conversations going. Here's more opinion for you. Earlier in the day, we caught up with Sanjeev Prasad, Managing Director and Co-Head of Kotak Institutional Equities. Asked him about his thoughts on the markets right now and what he makes of the current volatility.
I would think this year is going to be fairly volatile because we have a lot of global events which will play out through the year, and we honestly don't know how they will play out. On the one side, you have some strengthening of the global economic recovery, which would suggest that the US Fed and the global central banks will reduce the amount of monetary support they have given to the market so far. Of course, there's still a lot of debate about that as to how much support will be available over a period of time and how quickly the support will be withdrawn. And a lot of that will depend on data. So 1 month, if you have soft employment data, inflation data in the US, the market will start speculating about somewhat, less hawkish US Fed. You have stronger data points, and suddenly people start speculating the other way. So that is one big issue. The second one is, of course, on global trade, where the news flows have been, very, I would say, schizophrenic. I would say, one day positive, one day negative, and the markets accordingly swing based on that. Even in our case, if you look at, we have a lot of macro variables which we need to track pretty closely. You have seen some improvement in the macro over the last couple of weeks, more on the bond market side. But we still don't know how GST revenues will pick up over the next 2-3 months or so, and depending on that, the bond markets will behave accordingly. And lastly, oil prices are also fairly volatile as of now. So you do have a lot of macro uncertainty, and do remember in India's case, we also have political uncertainty towards the end of the year when you have a number of states going for elections, and as we head into the national elections next year, a lot of speculation will start around that.
There are quite a few sectors where the micros are going to come out and perform. I mean, I think you all had consumer, you all had automobiles, industrials, metals mining, NBFCs. Given that, do you think at least the bottom is protected? We've come up rather smartly from 10,000.
See, the earning numbers will be pretty decent this quarter, looks like, in some of the sectors that you highlighted. We are looking at about 10% growth for the BSE 30 index as a whole. And it's obviously supported by low base, I should say, in many of the sectors that you highlighted. But having said that, the economy seems to be clearly recovery. There is generally some amount of positive sentiment even around private capex these days. Apart from the consumption theme, which continues to be reasonably robust, rural economy showing some signs of recovery. So all that looks good, but I think the market performance will depend a lot this year on macro. Do keep in mind the fact that the valuation numbers already factor in a decent amount of earnings growth. Earning numbers are a must, I would say, in the sense that you have to have, I would say at least high teens earnings growth. Otherwise, anyway, you have a problem with valuations in that case.
So, if we talk about earnings, where there might be some pleasant surprises for this market, would it continue to be the consumer sector? Would you still advocate perhaps, adding fresh names to the portfolio in that case?
See, we just put out the quality numbers, so it's early days in terms of what could surprise us. But having said that, and of course, some of the sectors like automobiles, both consumer staples and discretionary NBFCs, and also metal mining, all will have pretty decent, YOY growth. In the first three cases, obviously had the base quarter numbers are fairly supportive in the sense that was a post-demonetization quarter, and that was probably the worst quarter in terms of impact on automobiles, consumer staple discretionary, and also NBFCs. So on the back of that, you will see actually very strong numbers in all the three sectors, especially in autos and in NBFCs. Now, how much numbers, surprise us positively, we'll have to wait and see. But in our case, anyway, we have built pretty strong numbers based on our best assessment of how the quarter went by. So let's see, what comes out better.
Now, from a portfolio standpoint, is it better to stick with the consumer names like maybe a Jubilant, which could be, or Titan for that matter, trading at historically high multiples? Or are you better off trying to search for value and maybe going in for the beaten down corporate-facing bank?
It's a very difficult one, I mean, these companies are so expensive now, the Titans and Jubilants of the world, that you always run the risk of, even though the earning numbers may be good, but let's say 5 years later, the exit multiple is 40 instead of, currently, let's say they're trading at 60 P on a forward basis, 12-month forward basis. If the 12-month forward eventually comes down to 40 over the next 5 years, you will probably not make too much money in this stock. So that's a real challenge over here. Given the kind of re-rating which has happened in multiples of most of the consumer staple discretionary names, how do you make money, getting in now? And you run the risk of the re-rating of the multiples over a period of time as, some of the monetary conditions globally also start normalizing.
Okay. 10,422 now on the Nifty. So trying to make one last attempt at that resistance mark to see if we can somehow take that out on a closing basis. But suffice to say, the Nifty is at the high point of the day, and from the low point, there's been quite a bit of recovery. The low was 10,360. From the low point, the 60-point rally that you've seen today, buy on dips has worked out. If you look at the intraday, don't go by that 15-point move. From the low point, there's been quite a bit of recovery. Amrish, before we thank you, any interesting stock that looks good to you right now?
Yeah, in fact, I've been looking at Bharat Forge. I mean, being the leader in this in the segment, close to about 50-55% of the revenue comes from the CV segment, where again, I mean, we have been seeing extremely good growth and expected to grow at least in the foreseeable future. Even the North American truck demand also has been, I mean, has seen a decent revival in the recent past. And currently it's operating at about 75-80% capacity, expected to go up to about 95% by 2020. So I mean, looking at the EPS of about close to about 26 for FY19 and about 30-32 for FY20. I think at these levels the downside seems quite limited, whereas I see a level of about 880 or so.
Okay, all right, Ambrish. Thank you very much for joining in and giving us your view on all of those stocks. By the way, the market just marches on the mid-cap side. Take a look at REC, take a look at PFC. Now it's these stocks that are beginning to spike higher, and these are big moves that we're talking about in a couple of the names. The Nifty Bank keeps struggling. That's been the one constant theme today. Otherwise, the market is not that bad, especially if you go beyond the indices. Well, we have Sanjeev Bhasin also joining us in the conversation. Just in the next couple of minutes, we'll have him with us. So, Ashwani, I'm going to get back to the banks, which have been the spoil sport of the day. What views now on the likes of SBI or even an Axis and ICICI Bank that at least today didn't see the follow-through?
See, in the context of the rallies these guys have seen, a 1-2% type of decline should be bought into. My sense is that today they should have fallen 4-5% if really the stocks were in a mood to take bad news. But I think this kind of action is more positive than negative. So I would think they would soon resume their rallies and probably see even higher levels. So this is the kind of day when multi-day holders should buy into strong stocks.
Okay, multi-day holders should buy into strong stocks. Sanjeev Bhasin of IIFL joins us now. Sanjeev, good afternoon. $1 million question: is the correction over, and is this market now headed back towards its highs?
Yeah, hi. So, Anuj, I think you could again have one more bout of volatility in the next fortnight, which can again see levels closer to 10,000. But in this part, I think maybe another 100 points on the upside. Like I said, the next fortnight is volatile, but like I've been opining that, consolidation in the month of April, first week of May onwards, we are definitely headed higher. New highs will be questionable, but 10,700, 800 in the month of May is very much on the cards.
Okay, by the way, take a look at Tech Mahindra now. It has dethroned HCL Tech in the terms of the kind of move it's making for this hour. Big spike coming in. Otherwise, of course, in terms of percentage gains, it's still HCL Tech which is higher. But buying in IT has been a consistent factor in today's trade. Sanjeev, good afternoon. IT for you. Large caps, what do you like the most, and would you advise buying ahead of numbers?
So HCL Tech top pick, preferred level was 880 to 900. Of course, now it's up about 5-7%, but any dip towards 930, 940, catch it. We think 1150 in the short run, maybe in the next 6 to 9 months, is very much on the cards. Results will be the barometer. We think HCL Tech numbers, margins will be the best in the large caps. Mindtree and Tata Elxsi are two stocks which we are again relatively bullish in the mid-cap space. So these three for us stand out. You can add a Cyient over there. I think again those would be key numbers, key stocks where quarterly numbers would actually surprise on the upside.
Okay, well, phenomenal. This move on Titan actually is getting right now. If you take a look at its market cap now, almost 87,000 crores is what we have. Would you believe it though? Avenue Supermart is actually even higher than that. So, of course, some of these stocks really just one-way rally, and the market correction hasn't bothered some of these stocks at all. Sanjeev, your thoughts on some of these names? Jubilant as we speak has made yet another lifetime high. Titan is at lifetime high. Bata right now as we speak is at the high point of the day. All the urban consumption stocks are seeing massive rallies.
Yeah, you can add a Nestle and Anuj, which I've been very bullish all the way from 6,800 to 7,000. We think Nestle's 8,500 was my target. It is now going to exceed that. Maybe 9,000 easily in the short run. But yes, if I had to take three names and still stick my neck out, Nestle, Jubilant and Tata Global. Tata Global again, I think after that recent correction up to 320, 325 has seen a decent correction. But this, 265, 270 or even now, that would again fit the bill for this urban consumption, given that the Himalaya Water and the Starbucks franchise is doing extremely well. So like you said, Titan again, big beneficiary of this whole imbroglio on the gems and ruby space, and rightfully or wrongfully, I think the market caps are now exceeding most people's, expectations.
You know what? I don't know, Anuj, whether we can even go by the advanced decline ratio. The way stocks are moving right now, mid caps, small caps, name like GNA Axles, they're part of the CV story when you're talking about, commercial vehicles doing really well. That stock's spiking higher. REC, PFC, Radico Khaitan, Sterlite Tech, Nalco is adding more weight and more momentum. So the headline index, the mid-cap index is telling us it's a quiet day. Advanced declines perhaps are telling us that it's not that great. But, I mean, what do you make of the kind of buying that some of these stocks are looking at? Beyond consumption. Consumption, of course, we've consistently discussed.
Yeah, Surabhi, my only worry is it could be random move as well.
Okay.
And, the Nifty is right now at very crucial resistance mark. We've spoken about it for last couple of days. Sometimes, these kind of moves convince you that the correction is well and truly over, and now you are moving on. And we're getting close to the month of May as well, where historically
sell in May and go away.
Yeah, though it hasn't worked out.
It hasn't worked actually
last
couple of years.
Last 3-4 years, but who knows? Maybe this time it works. But look, let's take each day as it comes. For now, this is that kind of a market. I don't think taking aggressive calls in this market is working right now. Today's verdict is that if you buy on declines, the market wants to, give you some money. At least that trade has worked out today. So let's see if tomorrow there's one more decline and the market rallies again. We'll have to see that. Honestly, either you just take a positional call and, play via calls, or you take each day as it comes. It's that kind of market. Because, if you had gone, for example, long yesterday on the index, today you would have been stopped out. But intraday, you would have made some money. So very volatile this market actually right now.
The ticker is alerting us. I'm guessing that's an arbitrage, a little bit of an arbitrage between the BSE NSE price on Mahanagar Gas. There's a slight differential there, about 4 rupees on the stock, depending on which exchange rate you are looking at. That's Mahanagar Gas for you. But Sanjeev, any interest in these power financiers, PFC, REC? Are these just sporadic moves? Any thoughts?
Well, I think the worst is priced in. We know the stress, and we know that the government is going to take corrective measures, whether it was Shakti or Uday. I think a large part of that also gets allayed that merchant power rates are rising, power PPA agreements are now very much in the offing. And I was hearing Lata's conversation with the power secretary, who explained that how some of the pilot projects which PFC, PTC will be participating are very much crucial. So 7.5%, 8% is a dividend yield. If you have to take a little bit of risk, which I think is now the name of the game, if you want to make high delta, then 85 on PFC and 125 on REC is where we put some money. We think in the short run about a 15 to 20% upside could be seen in both these stocks.
Okay, the stocks that are now ending closer to the highs of the day are the metal names, Nalco, Hindalco and Vedanta. So the non-ferrous part of the metals has done well. We're talking to Mr. Tulsen as well in the morning that something materially is changing for some of these. So there's a bit of a rally right now. Ashwani, on some of these metal names, you reckon Vedanta is up 9% this month, for example. You reckon they can go back to the recent highs?
See, they're going up because aluminium and copper are going up. So as long as these Russian sanctions, etc., remain in force, they can keep going up. And they are coming off of correction, so it's not like they are overbought. My sense is if not cross previous highs, they will get fairly close to them.
Okay, they'll get fairly close to them. Mitesh, anything interesting on your radar as we count down to the market close? Mitesh?
A couple of names. I think Aurobindo Pharma, I think, has come back into reckoning. I think today it is giving signals of restarting an up move. I think it's heading towards 640, possibly 660 on the upside. So that's a good trading bet. That apart, I think, you couldn't have missed IRB today. I think very clearly a big breakout. It's never had a closing about 274, 275 levels. So in that sense, it will be a multi-year breakout for IRB. It's had something like that 10 years back, but I think after the last 4 years, we've seen 270 holding out very, very strongly. And today, I think it will close about that. So I think that should enjoy a very good momentum in the next few weeks to come by.
Okay, well, we've just got about 2 minutes to close out. Anuj, which way will you cut it? I mean, because for what it's worth, Bank Nifty is still ending down 150 points. Can't ignore that. So, overall call?
You know, after a 1,000-point rally on 3 days, 150-point down, I think is par for course really. In the context of, you know, the macro headwinds that we had today, so to be crude, bond yields, you know, selling in large cap banks. I think the fact that you're still ending in the green is quite okay, though. Now, you know, now your reference point is very clear. For last 2 days, the market rally has been stalled at around 10,425, 10,428 to be precise. So that becomes your reference point to work with for next couple of days. Just keep an eye on the advance decline, because over there, second day running now, that their declines are outnumbering the advances. So that is something that perhaps you would want to keep an eye on. Also, what is interesting is that just a week back, it looked like the market was heading into earnings season with weak position in IT. That was an aberration because IT is actually looking quite strong. If you take a look at, in fact, today's leader was IT. So if you look at TCS, HCL Tech, Infosys, all these stocks rallied. Metals are having a big run. Vedanta, in fact, is the biggest gainer, up 4.5%. Hindalco was up about 2%. Tata Steel was up about 1%. And what can you say about consumption? And by consumption, I mean everything. I mean, Hindustan Unilever, Nestle, from the broader market, of course, we will talk about stocks. But even in Eicher Motors, up about 2.5%. Titan, up about 2%. Mahindra & Mahindra was up 1%. So all these stocks looking quite good in today's trade. What didn't look good? Oil marketing companies. Across the board, 7% decline in IOC, HPCL, and BPCL. Some banks were weak. ICICI, State Bank of India, both were down between 1.5% to 2%, and Indiabulls Housing was down about 1%.
Well, on the mid-cap side, mixed trends really. The index is ending quite flat, about a 16-point drop on the mid-cap index. The advance decline ratio is actually favoring the declines. But if you look at where the action was, I'm going to pick off on consumption, as Anuj was talking about it. I mean, move on a lot of stocks across the board. So let's start with FMCG. Some of the names like Dabur, for instance, doing very well. Bata, Jubilant, and these were names between 2%, 3%, depending on which stock you were looking at. We're finding consistent buying. Some of the future group stocks were quite excited. Future retail has ended about 2.5%, 3% higher. Let's get future consumer going as well, because that is where there was a brokerage note with an upside being spotted out. So about 1.5% up on that stock. Radico, United Spirits, these were some of the stocks on the alco beverage side that had another good session today. Radico really spiked from the lows of the day, and USL has had a phenomenal session. Maybe you can get United Breweries on the screen as well to see how that's closed out. Then more names on the upside. I mean, TVS Electronics, some of these stocks like Shakti Pump, Roto Pumps, and these are big double-digit gains that I'm now talking about. Not TVS Motors, TVS Electronics, and that's a 20% circuit on TVS Electronics, by the way. IRB Infra, 10% counting. Quality from the dairy side, 4.5% on the upswing. PFC, REC, some very hectic buying in the dying moments of trade. 3.5% up on some of these stocks. Spark, GNA, Axles. I mean, I can go on naming. Not too many patterns here in terms of sectors, but there was a lot of interesting stock action underway. Finally, on the upside, Kaveri Seeds, it's off the highs, but that news that came in from the Delhi High Court on BT Cotton, that worked well for this stock. On the losing side, we of course have to look at more OMC names. So whether it's MRPL, Chennai Petro, these stocks have been down 3-4%. Goa Carbon has lost about 3.5%. Bakrangi has had another very erratic day of sorts, so that's on the downside. NCC lost quite a bit of ground. And again, banks were really not a great spot to be in. So Canara Bank, 2.5%, Bank of India, IDBI Bank. These were stocks, OBC, these were most of these stocks on their way down. So mixed trends for the mid-cap market, Anuj.
Oh, yes. Let's take final thoughts from our guest then. Sanjeev, on Eicher Motors, up 8% this month. It had a big correction from the highs. You reckon it's getting its mojo back?
Well, it's already regained most of the mojo, 8% on a single day. I mean, so I think this stock is an outperformer, and now there is talk that again some large funds are going to buy in that. I think that whole space, you know, whether it's Eicher or Maruti, these have been very good places to hide, Anuj, in this time of volatility. And now, you know, you would wait for the numbers, which again could see another growth in volume. So the stock has been expensive, it gets more expensive, but I think it's been a outperformer in the recent fall. And like I said, you know, consumption stroke auto consumption again are places where people are, the smart money is actually hiding. And I don't see any let up in this. I would say 33 to 34,000 in the next 6 to 9 months is definitely on the cards.
Okay, Ashwani, so then, I mean, how would you approach trade tomorrow, given that banks chose to sit out today? What's the call?
See, it's a sideways market, and 10,350, 10,450 is the range. Today, banks gave you that opportunity because of whatever macro news you had. Otherwise, there wouldn't have been as much opportunity. So, I believe we could spend a few more days in this 100-point range, and then post that, you could get upside. The positive is IT is participating, corporate banks are participating, metals are participating, so there are enough legs. So it does not look like we'll substantially break 10,350, and that will encourage more buyers. So sideways till we take 10,450 out.
Tej, same question to you. How would you look at Thursday?
Yeah, so been advising that 10,430 remains the pivot to cross on the upside. Till then, it's a buy on dips kind of a market. We got one today. My sense that eventually we'll break on the upside, and I'll maintain targets of 10,550, 600 to begin with. And if we start getting past 10,600, then some kind of real strength would come in on the medium term chart. But for the timing, I think we'll keep that kind of target. The interesting part is that IT has come back again, and a lot of stocks individually on the IT names. I think stocks like TCS, Hexaware, etc. are looking very good. And maybe a couple of days, for the next few days, that could be a good focus area.
Over 600 employees of 63 Moons protested against the EOW action that has been taken against the company. Yash Jain has more details on what transpired today.
On April 5th, as a part of its investigation in the NSEL scam, the Economic Offences Wing of the Mumbai Police attached the operational accounts of 63 Moons. Now today, over 600 employees of the company have taken to the streets to protest against that very move of the Economic Offences Wing. A move which, according to them, will disrupt the day-to-day functioning of the company, put their salaries into jeopardy, and more importantly, weaken the defense which the company is putting on the legal turf against the various enforcement agencies. Remember, attachment of the operational accounts is just one aspect of the story. The Economic Offences Wing today also notified freezing the IPR of the Odin software and also transferring the funds which really come from this particular business segment into an escrow account. Do remember that Odin software is a software which is used by a major section of the market participants, and it does become the biggest revenue generator for 63 Moons. In Mumbai, for CNBC TV18, Yash Jain.
Crude oil prices clearly have been the major buzzing news, whether in the Indian markets or the global markets as well. Starting with the global markets, and we did see the prices touch a 2014 high in the New York session yesterday. Since then, of course, there has been some profit taking. The 2014 high, of course, has been 71.34 on Brent, and we are barely 10 to 15 cents away from that. So closing very close to the kind of gains that we saw onto that one. But in the other major news, we have had Saudi Aramco and India today sign a major pact when it comes to refining in the Indian markets. Amin H. Nasir, President and CEO, Saudi Aramco, now joins us to talk exactly about that. Mr. Nasir, hi. First of all, congratulations on the big dealing, or rather the deal that you have signed today. Give us more details on the MOU that you have signed, and what kind of stake does Saudi Aramco really hold on to this one?
Yes, thank you. We are really excited about signing a MOU in the presence of the two ministers, the Indian ministers and our energy minister. This is definitely a major agreement between Saudi Aramco and three Indian companies, Bharat Petroleum, Hindustan Petroleum and Indian Oil. The three companies get 50% of this agreement and 50% for Saudi Aramco. This is a major integrated refinery and petrochemical complex, 1.2 million barrels per day, 18 million ton of chemicals in the so it is a major investment by Saudi Aramco in the Indian market.
Mr. Nasir, this is not your first visit to India. I mean, since you have opened the office last year, you have been making visits. India is one of the big markets for Saudi Aramco. The relationship goes back far there. So what is your sense on partnering onto other areas, products as well? How are you looking at that? Are you in conversation with other companies too?
Of course, you know, India is and we have a lot of dealings with a lot of Indian companies, and they are strategic partners in many ways. We supply close to 800,000 barrels per day in the Indian markets. So it is very important market for Saudi Aramco. The growth is very significant in the Indian market, not only in oil and petrochemical sector. So it is of strategic importance, and we are trying to create alliances and JVs with our partners. We have interest for a long time. This is the first time we culminate all of these efforts with a major agreement through this MOU. And we are looking, as I said, for further growth opportunities within the Indian market. As you highlighted, there's a growth opportunities, especially in the petrochemical sector as well. His Excellency the Minister highlighted that there is also interest from other companies like SABIC in the Indian markets. For Saudi Aramco, it has to be integrated between refining and petrochemicals, and this is where hopefully it will not be the only agreement that is signed. There are going to be other agreements hopefully in the future.
You know, the Indian Prime Minister today also mentioned on how the math adds up to an estimate that we are looking at 4.3% energy consumption growth for the next 25 years now. Is that what we are working with? How do you see then Saudi Aramco partnering or building or being a part of this growth as one of the major players in the space?
Well, as highlighted by the Prime Minister, it is 4%. The Indian market today is over 4 million barrels of import. You're looking at, by 2040, close to 10 million barrels of consumption. And that is very high growth rates, considering this is the fastest growth rate in anywhere in the world. The interest, we are the biggest supplier of crude oil in the world. We have the highest reserve available. We are the most reliable player in the market, and we are, as I said, we have a huge interest in the Indian market, and we are through this JV, which is 1.2 million barrels per day, and hopefully through other JVs we will continue to meet and participate in that growth potential in the Indian market.
Mr. Nasir, last time I remember when we spoke, India was just grappling and understanding the impact of GST. And then, of course, we've had other policy reforms and other reforms as well. What is your observation been on that, on how India has changed or opened up to the international markets?
Yeah, we went through a lot of things and discussions with our partners, and all what we have looked at, it meets our requirements in terms of participation. And as highlighted by His Excellency today in the interview, that the reforms introduced by the Prime Ministers and all are on the right directions, helping bringing additional investment to the Indian market.
Mr. Nasir, Saudi Aramco also is spreading itself out in other countries. You recently have closed a deal with France as well. It has been a big deal as well. So what other areas, other countries is the company right now looking to partner with?
Just in the last week, we announced a major expansion in our Port Arthur refinery, close to $9 to $10 billion of an investment in our petrochemical complex in our Port Arthur refinery in the US. We also 2 days ago announced an MOU with Total, our partner, for also a petrochemical expansion to a refinery in Saudi Arabia that we have a JV with Total, and also it's close to $9 billion of investment. We just also closed the deal with our partner Petronas for 300,000 refining and petrochemical complex in South Johor, and hopefully that facility will be on stream next year. We are working with the Chinese on our partners CNBC and Sinopec about potential also JVs in China. We have also we're working with our partners in Indonesia regarding also a refining in Cilacap, and hopefully that will also be finalized soon with our partners there.
Mr. Nasir, there's another question which I'm assuming you get asked everywhere that you go, and this clearly is about Saudi Aramco's IPO that has been a subject of a lot of conversation. So what can we understand? Is it getting listed this year, or the date has been pushed into 2019? And also, what exchanges, what countries are you looking to list?
Well, from Saudi Aramco side, the process for listing Saudi Aramco is on track. Let me put it that way. It means the preparation for listing the company in the second half of 2018 is ready. The listing will definitely happen in the local stock exchange in the kingdom. With regard to which venue, which other market other than Saudi Arabia and the timing, it's a process that is being looked at by the government. So when and where is the government will decide on the listing.
Also, there's so much happening in the global markets. Let's talk a bit about that also, because we are looking at the crude oil prices, very volatile. There has been the whole import tariffs, geopolitical concerns. Would you look at these things as short-term phenomena? If yes, then what are the factors that you see having long-term implications when it comes to the energy sector?
Well, there is a healthy growth in the market in terms of demand. We have seen, if you look at the IEA or the EIA, in terms of the demand growth, for the last 3 years, you're looking at between 1.5 and 1.6 million barrels. So for 3 years, the demand growth is around 5 million barrels per day. And of course, there is a lot of talk about transformation, which is happening in terms of renewables, electric vehicles, and that is taking place definitely, but it is starting from a low base. So if you look at, we always said, if you look at electric vehicles, the total consumption by electric vehicles is around 100,000 barrels per day. All the electric vehicles that are currently on the market, if you look at it out of a supply or a demand of about 99 million barrels, that is a very small amount. So there is a growth, but it's starting from a small base. There is a healthy demand, and there is also a natural decline that is happening in existing fields, and the natural decline is between 3 and 5%. So out of 100 million barrels of supply, there is a need of additional capacity to offset the decline, which is between 3 million and 5 million barrels per day, and meet the additional demand, which is around 1.5 to 1.6 million barrels per day. So you need between 3 to 5 million barrels per day of additional capacity to offset the decline and meet the additional demand. What we are seeing in the market, that there is not enough capital being injected by the companies to meet the additional supply requirement in the demand requirement in the future. There is $1 trillion of capital investment that either deferred or canceled, and that will have an impact over the long term in terms of meeting the demand requirements. So there is a transition that is happening, but there is also healthy demand that needs to be met.
Really, as there is transition happening, change is always constant. But what is the kind of demand that you would say, or rather the investment that the energy sector has to see, has to ensure that the demand is met over the coming next decade now?
Well, we are in an industry where, of course, to bring any project, it takes you between 3 to 5 years in terms of additional supplies. Shale oil is definitely bringing additional supply. There is healthy growth in shale oil. Last year, almost 600,000. This year, there is a talk about 800,000 barrels of additional supply. But that alone is not enough, even though there is a lot of capital being injected to bring additional shale oil. The decline rate in shale oil is very significant. You're talking about a decline of 70% in the first year. What you need is more conventional oil with better plateau. You see, the difference is that you need a more sustained plateau, so the decline will not happen. It will take some time before the decline will happen. And that type of investment require a significant capital and also require significant time to bring it on stream.
All right, so enough investment is needed. Mr. Nasser, thank you so much for joining us. That's the word coming in from Saudi Aramco. Of course, a major deal, a major pact has been signed between Saudi Aramco and 3 major Indian oil companies there, and much more required, especially as the PM says that our consumption in sense of energy is expected to only grow in the next coming 25 years as well.